Welcome to my weekly market roundup, 28th November 2020. I am Sagar Nandi. I used to work in IT. I retired now. I am swing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share stock and market analysis using live systems on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. These are all done using live systems and you are most welcome to make use of them. If you are able to hear me and see my screen, you may let me know using the live chat panel. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. This is a live session. I'm going to analyze the market using the same systems that I use in my actual trading. I will use Q Elite and Q Global Q Finder for technical analysis. Q Elite is running on TradeStation, Q Global Q Finder running on Metastock platform using Metastock, Zenith data. For fundamental analysis, I will use Q Vital, sector industry rotation analysis, Q Edge, and market level index analysis, Q Index. You may use these systems in different workflows. For example, you may start with sector industry rotation analysis, find the strongest sector, drill down into the strongest industry, and then from there look at the fundamentally strongest stocks. Once you identify the stocks from Q Edge, you may open them using charts, that is either using Q Global or Q Elite, or you could look up the trade signals using Q Finder. That will be top-down analysis where you are ensuring strong sector industry and fundamentals from Q Edge. Then you are looking up the charts for technical signals on Q Global, Q Elite. Alternatively, you could first look up the signals in Q Finder and then look up the charts in Q Global and Q Elite. That will be a top-down analysis and you will end up with stocks that has strong technical signals and as well as in strong industries with good fundamentals. That is the top-down approach. If you are carrying out a bottom-up analysis, then you may start with Q Finder. That is, look for Q buying signals. Once you find them, you may look up the charts using Q Global or Q Elite. Alternately, before opening the charts from Q Finder, you could go to Q Vital to check its fundamental strength. If the stock or stocks are looking fundamentally strong, from Q Vital you could look up their industry strength. Again, with these steps you will ensure that the stocks have Q signals first of all, then you would have confirmed their setup using Q Elite, Q Global, fundamental using Q Vital, and industry strength using Q Edge. That will be the bottom-up approach where you start with Q Finder. The third workflow that I use sometimes, that is fundamental first. stocks fundamentals are available in Q systems in multiple places. You may run a fundamental analysis of all your stocks, maybe thousands of stocks, your trading universe. You may run it using Q Vital first. Once you find strong fundamental stocks, growth stocks or value stocks or both, you have multiple options. You may look up their industry strength in Q Edge first, or you may look up their trade signals in Q Finder, or you could directly go to Q Global and Q Elite to look up the charts. If you came to Q Finder, then from Q Finder again, you could go to Q Global and Q Elite to look up the charts. That is a fundamental first approach. Again, you are going to ensure that your stocks are having great fundamentals. That is the starting point for fundamental first. That they are in strong industries with proper technical setup that you are finding from Q Finder and confirming that from Q Global or Q Elite charts. That is one way to run fundamental first workflow. In this case, you started with Q Vital for fundamental analysis. Alternatively, you could also start the fundamental first analysis from Q Edge or Q Index, because Q Vital, Q Edge, Q Index, all of them have stocks fundamental scores. Only the stock universe is different. For Q Index, you can choose any of the market indices, Dow Jones, S&P 500, 1500, Nasdaq, or any other index. In fact, not only S&P 500 indices, not only Dow Jones indices, but also Reuters indices. That is your starting stock universe. If you are using Q Edge, your starting stock universe for fundamental first approach is the S&P 1500 stocks. And if you are using Q Vital as the starting point of fundamental first workflow, then your symbol universe is whatever you would like it to be. It's entirely in your control. Those are the three workflows that I use regularly. That is top down, bottom up, or fundamental first. Whatever workflow I use, I end up with stocks that are in strong industries with great fundamentals and that are giving a buy trade setup today. Not yesterday, not 1 week ago, but today using real-time data. I explained the workflows in a detailed manner today. However, I use them every day and I shared them also in every webinar. I took a while today to explain them in more detail so that you can internalize the workflows and may adopt one or all of them in your own trading. That was the last slide. Let me continue with the live system. And I'm going to use the latest update of all the Q systems, including market breadth. After I introduced market breadth on Q Global, several people expressed interest and I have been able to install it for most of them. I will use the latest market breadth templates also. Let's start with global markets. Australian index, no, this is not Australian index. Let's start with this index which is on the chart, Japan's Topix index. Very bullish in the weekly, very bullish in the daily. It's overbought but very bullish. Let's look at the Australian market, AXJO index. It was bullish for many weeks, This week also backdrop color is bullish, but the shape is indecisive in the weekly chart. In the daily, after displaying the bearish headwind for one day, it pulled down. Though the bearish headwind signal came, there was no bearish headwind short trade setup, so we would just apply trailing stop to existing long positions. It is continuing in an uptrend bullish, and it is continuing to be above the upper boundary, therefore overbought. China market CSI 300 index. Weekly is indecisive, daily is bullish, close to the upper boundary. It looks like it will go up and hit the upper boundary in the coming week. Looking at that, you might look for buy setup in fundamentally strong stocks. It is also in an uptrend now. UK's FTSE index. After the breakout from previous downtrend, it is consolidating in a sideways range. The weekly shape is bearish, but the color is bullish. If the index can now break out of this top watermark resistance, that may give breakout setup in individual stocks. This is also in an uptrend now. And the last of the global markets we study, Nifty 50 index of India. India market was the strongest. It is continuing to be strong. However, this week's candle shape is indecisive. Doji-like candle at the top. Whenever a doji candle appears after a prolonged up move, Q traders are cautious. It's not bearish, but it is just telling to be cautious. The daily is in an uptrend above upper boundary, therefore overbought. All the global markets are in an uptrend now. All are bullish. Let's now look at the USA market, and for that, let's start with the market ETFs. For global markets, I used Q Global on MetaStock. For market ETFs, I am going to use Q Elite on TradeStation. Starting with S&P 500 ETF SPY, bullish in the weekly, bullish in the daily, in an uptrend. One day ago, there was a bearish headwind signal in SPY that also had a lower tail candle. There was no bearish headwind setup. We would simply apply trailing stop, which could be using Q protection signal, or if you had significant profit, you could put profit below the trendline support. Friday ended with an indecisive shape candle. Again, it is at the very top. Indecisive candle followed by bearish headwind. Therefore, we may be cautious and protect our long positions. I am doing the same. SPY is bullish overall. QQQ, Nasdaq ETF, bullish in weekly. In the daily, it is at a quadruple top, you may say. On Friday, it created an indecisive shape candle. It is close to the upper boundary, therefore I'll avoid buying now. Remember, in the last webinar, when this cyan candle came in the daily chart, that gave a go with flow trend following long trade setup. I mentioned I wouldn't buy QQQ because the other market ETFs were overbought. QQQ was not overbought. I wouldn't buy. In any case, it has gone up since then. Now it is at watermark resistance with indices shape candle near upper boundary. I will avoid buying now, but it is bullish. Dia bullish in the weekly. For 3 weeks it is range bound near the watermark resistance level where bearish headwind came earlier, which led to a price drop. I'll be cautious about buying into Dia now. In the daily also it displayed a bearish headwind and then followed that with an indecisive shape candle near the upper boundary. I will be cautious with Dia as well. IWM, this is the strongest of the market ETFs now. Relative performance shows that. Weekly is very strong, daily is also very strong and overbought. All the market ETFs are bullish. Let's look at the market internals. Starting with the composite indices. Here I am looking at the Nasdaq composite and NYSE composite along with the 3 pairs of internals here, new high low, advanced decline, up down volume, and finally the 2Q indicators, thrust and jump. Jump shows how far extended is the instrument relative to its past history compared to past history, and thrust shows how fast, with how much pressure, how much thrust, how much intensity it jumped to that height. When both of them become red hot, then there is high likelihood that the instrument will pull back. If we are looking for a short trade, we'll wait for a proper Q signal, bearish signal like this stretch release or the bearish headwind signal to come before taking the actual short trade. Before we take the short trade, or even if we don't take the short trade, when the thrust and jump both shows red alerts in the weekly charts, then we are cautious about the long positions. We may also look for divergence in thrust and jump in the weekly charts. That is the only time probably where I look at divergence of any indicator. They tend to be very reliable. Many divergences are not reliable. Thrust and jump divergence are reliable and I use them on the weekly interval. Daily interval may not be giving any signal. Now if we read the chart one by one, all the panels, Nasdaq composite broke out of the trendline resistance, also broke out of the watermark resistance. Closed with backdrop color bullish, shape also bullish. So Nasdaq composite as a whole, not Nasdaq 100 but Nasdaq composite is also pretty bullish. NYSE composite also has bullish shape, bullish color, couldn't decisively break out of the watermark resistance yet, but it is still bullish. If we look at the internals, new high low, bullish for both the composites, there is no divergence, no bearish signal. If we look at advanced decline and up down volume, the same conclusion. That is, not only is the market going up, internally under the hood also, more stocks are going up, more stocks are making new all-time highs, and the up stocks are going up with higher volume. Only concern may be that there is significant divergence in thrust and jump for both the composites. However, that divergence is important only if the price can tilt down, maybe in the coming weeks, with a Q bearish signal, that is either bear release or bearish headwind. If that comes, then we may be cautious with long positions and may also look for short trades. That has not happened yet. So far the market internals look through the composites are very bullish. Now let's have another look at the market internals, this time using the major indices. Again, I am using the weekly interval. Here I am using the same studies but not on composites, on the major market indices. Here first starting with Dow Jones Industrials, and again using the same internal studies, new high low, advanced decline, up down volume, and the same two Q indicators, thrust and jump, on the weekly interval. Again reading all the panels one by one. The index itself is bullish, however it is moving sideways for 3 weeks near the watermark resistance where a bearish headwind came earlier that led to a price drop. Similar to the chart of DIA, so we may be cautious. If we look at the internals, new high low is absent, meaning the Dow Jones Industrial components are not making so many new highs now as it did earlier here or even here. So that is a relative weakness. There is no bearish signal because the new high low did not turn down. There is no magenta trough here. So it is neutral. It is not continuing to be as bullish as it was earlier. Advanced decline is showing that it's neutral, meaning that though Dow Jones Industrials itself went up, if we look closely into the internals, majority of stocks did not go up. However, the stocks that went up with higher volume. There is divergence in jump and thrust. There is some weakness but not enough bearish signal. We continue to remain bullish based on this internal study. Same study using another major market index, S&P 1500 in this case. Again, the index itself is bullish. Here we find some new high low. So S&P 1500 stocks new high low indicator is more bullish than Dow Jones. However, advanced decline is in fact negative. So internally there is some weakness. Up down volume here has no signal. There is divergence in thrust and jump. Some weakness but not bearish enough. Overall, we are remaining bullish looking at S&P 1500 internals as well. S&P 500 internals now. S&P 500 index itself is bullish, though it is moving sideways for 3 weeks now. New high low is remaining bullish, it is positive. We have cyan bars, no magenta bars in new high low. Advanced decline is not showing the bullishness because it is slightly negative, not positive. Whereas the index itself is up, showing that the large cap and mega cap stocks went up more than overall stocks in number, and volume is also not bullish, it is neutral. Divergence in thrust and jump. It is neutral. We are not saying that based on this study we are not able to say it is bullish or bearish. We are neutral on the internals, and of course the index itself is bullish. And Nasdaq 100 index, it is bullish but it could not reach the watermark resistance or break out of that. So when I look at S&P 500, 1500 and Dow Jones, relatively Nasdaq index is now weaker. And this is Nasdaq 100 index, not the composite. We studied the Nasdaq composite earlier. It is bullish but not as bullish as the other major indices in terms of price move. However, when you look at the internals, new high low is pretty strong, probably the strongest of the major indices. And the same is true for advanced decline and up down volume. there is no divergence here because the index didn't make new high. So we cannot say there is divergence. Thrust and jump came down, but there is no divergence. What does it show? It shows that this week's candle is bullish, though relatively Nasdaq 100 is weaker than the others. However, the internals are the strongest compared to the other major indices. That shows that mega cap stocks might have come down. That led to relative weakness of Nasdaq 100, but internally, when you look at all the constituent stocks, more stocks actually made new high low, relatively speaking, compared to other major indices, and more stocks went up with higher volume. It is clearly showing weakness in large cap, mega cap stocks. However, overall, technology stocks are doing better. Let us look at market internals now using the two composite indices. One is canaries in the coal mine. This is an index, custom index created using the stocks that Dr. Jeffrey Scott uses in his webinars. I used the same stocks. In the last webinar on Wednesday, I showed that canaries in the coal mine had excellent trendline support. And that trendline support is holding. Weekly also has excellent trendline support. If you look back, then we can see that there are multiple watermark resistance nearby. And canaries in the coal mine could not make a new high, like for example IWM could do. It is in a way moving in a range. At least the peak of the move is bound by multiple watermark resistance level. Weekly showing it is bullish in the recent period or even in the longer term. However, because there is a watermark resistance here, we see that the canaries in the coal mine is relatively weaker compared to IWM, for example. There is no bearish signal, of course. And the last market internal study is using the custom index of Megacap top 20 stocks. This is very similar to canaries in the coal mine. It has support from trend line in both weekly and daily, has multiple watermark resistance near the current price. It is moving, you may say, practically sideways or range bound. Both the Megacap top 20 and the canaries in the coal mine studies are showing that megacaps are relatively weaker. That is of course shown by the relative performance also here tilting sharply down. And we came to the same conclusion when studying the major market indices. Overall, if we combine the studies of the market ETFs with composite indices internals with major market internals with the custom indices, then our conclusion is that market is bullish overbought. Megacap stocks are weaker than general stocks. Megacap tech stocks are also weaker than overall tech stocks. Other than megacaps, tech stocks are actually stronger. That is our conclusion. That helps us choose the sectors or industries or the capitalization of the stocks to look for buying. Megacaps are best avoided right now. You may look for tech stocks in tech industries that are strong now, and you may look for other stocks that may be small caps. Because IWM is very strong, you may look for small cap stocks. Earlier, I described the three typical workflows I use, and you could of course mix and match and create new workflows from them. You could use those workflows in real life and look for, let's say, small cap stocks. So let's do that now. I'm going to my universe of stocks, and if we see that IWM is very strong, I might look for buying opportunities from low price stocks or mid price stocks. I am going to put my cursor anywhere in the low price stocks column and click the peer analysis button. That is going to carry out a fundamental analysis of all the stocks. In this case, I am starting with Q Vital. Q Universe is same as Q Vital. Therefore, this workflow is the fundamental first workflow. It is retrieving data in real time from Refinitiv or Reuters. It has updated the scores. When we look at the scorecard of all these stocks, we may look for fundamentally strongest stocks simply by clicking these action buttons. Either 3-star, which will give you the great valuation plus growth stories, or you could use the single star for either great valuation or great earnings growth, or you could use the other action buttons to apply different criteria to look for box stocks, value stocks, etc. When I look at the 3-star stocks, that is growth plus value stocks, over one day they went up by significant percentages, many of them. So you could find buying opportunities from them. From here I could go to the charts, or I could go to check the industry strength, or I could select the stocks, let's say the stocks that went up by at least 2%, and then look them up in Finder, provided I ran Finder on these stocks. But I did not run Finder on the low price stocks, so I will not look them up on Finder. Instead, let me look them up on Edge, meaning I'm going to not open their charts right now. I'm going to see which industries are stronger, and I can see the industries here. Let me look up the industries first by clicking the gear icon. That is going to take me to QEdge and look up the industry score for all the industries for those stocks. I'm sorting by one day by double clicking, and I can see these are the strongest industries. Biotech is the strongest. We could look for buying opportunities there. Application semiconductors are also very strong. Remember earlier, while doing the internal analysis and market analysis, we found out based on data that technology stocks are actually strong, though megacaps are not so strong. And now we can see further confirmation of that from Q Vital and Q Edge. The strongest fundamental stocks are going up, and many of them are in application software and semiconductors. Therefore, we may now go back to the stock list and look for stocks in biotech, for example, or gold, or pharmaceuticals, or application software. Let's go back to the stock list in Q Universe, which is same as Q Vital. Now we may look at their charts. I did this analysis for ALT 2 days ago. Biotech is strong. We saw that. Let's now open the stocks charts. I may open in Q Elite using the grid icon by copying the ticker symbols and putting them in radar, or I could open on Q Global using the chart icon. Let me use Q Global. The daily entry chart is looking pretty strong. Let's look at the weekly and daily together. The weekly earlier was languishing around 1.52 price level. Then it shoot up to 35, pull back, and now starting to go up again. It's about to regain the yellow direction line in the weekly chart, displayed a bull release signal this week. The candle shape is bullish, color is neutral. It created a reversal candle at price extreme low in the weekly chart. That is a bullish signal. Whenever there is a reversal candle at the bottom, that is pendulum low, and here pendulum low in the weekly chart, that is bullish. And if I magnify the chart, you may note that there was a doji candle in the previous week, a perfect doji. Doji followed by a reversal candle is even more bullish. And we have a bull release signal as well. What about the daily? Daily has trend line support, two of them. One day ago, it had a bullish flow candle. If we look back, there was a huge price drop on this day associated with heavy bullish, sorry, not bullish, that was down day with heavy bearish pressure. The pressure color is also bearish. Immediately, it was followed by bullish pressure and bullish pressure U-turn, and price could not follow through to the downside. The trendline support held beautifully, gave a bullish flow candle one day ago. That was the time when I took a long position in this stock, ALT. When I took the long position, that day was also associated with very high volume. Bullish flow, very high volume, supported by trendline support, and very good fundamentals in a strong industry. This is how you may buy very low price stocks at a low price level when it is showing enough bullish signals. And if the stock comes down, your stop loss will be very narrow, below one of the trendline supports. If it goes up, you may consider booking partial profit at the upper boundary and then let profit run on the remaining position. Alternatively, if you see it is straight going up, you may hold on to the entire position with trailing stop to try to capture a bigger profit. Why I was comfortable buying the stock then? Firstly, it was a low price stock at support, showing enough reversal signals for me to consider buying, showing support levels that allowed me to have narrow stop loss. And if I now carry out a complete peer analysis of the stock ALT using Q Vital, then we may read out the fundamental scorecard with even more vividness. It's getting data from Reuters. Give it a few seconds. Let's look at it now. Excellent valuation, positive, and turnaround earnings growth. From negative earnings growth 1 quarter ago to positive earnings growth in the latest quarter. Short squeeze potential. The industry itself was very strong. I bought it 2 days ago, and yesterday also the industry was very strong. 92% of the 63 peer stocks went up yesterday, and we already looked from Q edge. We may revisit that again, that the industry biotech was very strong. I bought it 1 day ago, and yesterday also it was strong. And see how beautifully it is turning around. This is how I am able to find turnaround candidates, and this has a triple turnaround. Turnaround in terms of industry strength, Q edge shows that clearly. Turnaround in terms of earnings growth, Q vital shows that clearly. And turnaround in terms of price move, the reversal candle at the very low preceded by a doji candle shows that clearly. So this has a triple turnaround. These tend to give very high profit, high probability trades. Not only that, it tends to give very high reward risk ratio. The risk is usually very small, narrow stop loss as in this case, and profit tends to be very high. I shared several stocks earlier also. In today's session, I took a while not only to explain the workflows again, but also to show that you can find turnaround candidates from all the three angles: industry strength, fundamental strength, as well as technical strength using Q systems, all using real-time data, extremely reliable signals. That was an example of fundamental first analysis. Let me now demonstrate another workflow that I described earlier, that is starting with Q edge. That is starting with sector strength analysis. So I'm going to look at the sector score first. Let's look at the sectors. I'm sorting by one-day performance. The best performing sector on Friday was healthcare. It was not only strong, it is accelerating as well. And that acceleration, you may guess, from the score turning from magenta to cyan. But a reliable way, more reliable way, is to look up the pace column scores. If they are in cyan, any one of them, 1 day period, 2 day or 5 day period, then it is accelerating. So healthcare is the strongest sector and accelerating. What does it mean? In other words, it means it is a turnaround sector. Let's look at the healthcare industries. These are the healthcare industries. I am sorting by 1 day performance. The top few are very strong. I could look for buying opportunities in those industries. The next two are not so strong. However, if you look at the pace column, they are accelerating. That means I could look at the top few healthcare industries based on their strength for buying signals in stocks, or I could look at these two industries also because they are accelerating. From very poor score, they are going up. So my industries of interest in healthcare are all of these. Not the last one, because the last one is neither strong nor is it accelerating. So what I am doing now, I am doing top-down analysis. I found the strongest sector. Then I looked into the industries, found the strongest industries or the most accelerating industries. Now I am drilling down into the individual stocks. Stocks from only these industries. Again, I'm starting with 3-star candidates, and I see many 3-star candidates went up yesterday. I'm highlighting the ones that went up by at least 1%. And in this case, instead of opening the charts, let me look up the stocks in Q Finder using this button. Because I ran Finder already on these signals, instead of looking at the charts to look for Q signals or trade setups, I am looking them up in Finder. And Finder looked them up. I see several stocks. And what are these stocks? These stocks are the best fundamental stocks in terms of both valuation as well as earnings growth. These are in the strongest industries inside the strongest sector, healthcare. So they are having many bullish characteristics. Not only that, the healthcare sector itself is a turnaround candidate, and the industries were also turning around. Now I see there are many bullish signals. The bullish signals are in orange color that came today. The green signals are also bullish signals, came one day earlier, and the blue signals are also bullish signals that came during the week. Let us focus on the, let's focus on the trend following setups. That is the go with flow setup. Three stocks went up. Let's look them up, and now I am going to look them up using charts, and I'm using Q Elite now on TradeStation. So I'm going to click the grid icon to copy the ticker symbols that I can go and paste in Q Radar in TradeStation by selecting paste or control V. Right click, paste or control V. Here also I will have the trade signals similar to Q Finder, and I selected the stocks from Q Finder which had a trend following trade setup, and Q Elite is also showing the same go with flow setup. That means I could look for trade signals either using Q Finder or using Q Elite Radar, both in real time. Q Elite cannot be run on thousands of stocks, however Q Finder can. That is why I tend to use Q Finder a lot more. Let's look at one of these stocks, or maybe all of them. Let's look at HOLX first. HOLX. Here the daily has a bullish flow shown by the candle color and also the flow band indicator. It has a nice breakout from the trendline resistance. However, the weekly color is still bearish. 1 week ago it had an upper tail candle. This week it has a lower tail candle. If we combine the 2 weeks, it is moving in an indecisive manner. I'm going to avoid buying it. Also because it broke out but without bullish pressure or heavy activity. In fact, the volume yesterday was extremely low, shown by the magenta dot. Extreme low volume breakouts may not be so reliable, and the weekly is not bullish backdrop, so I'm not going to take the trade. If you try to apply the go with flow long trade setup, the weekly would not allow us to buy it anyway. Let's look at the other two stocks. Let's say RGNX. They are not linked. Okay, let me type it, RGNX. This is looking much stronger. RGNX sharply went up, pulled back, went up again on Friday with the bullish flow candle, with a bullish shape candle and a reversal candle. Those are all very bullish signals. The weekly is bullish both in color and shape. Therefore, RGNX is allowing us to take a trend following go with flow long trend. There is a trend line resistance, but that is some distance away. And again, remember, this is a stock that is giving a trend following setup, has excellent fundamentals in a strong industry in the strongest sector. Let's look at the last stock that we found, SUPN. In the daily chart, SUPN went up, pulled back, going up again with a bullish flow. Weekly is bullish, however, weekly has many trend line resistance. Therefore, I may avoid buying this. Though the daily trendline resistance is far away, weekly has many resistance, so I will avoid buying it. Of the few stocks I saw, I like RGNX. I demonstrated two workflows therefore. One is starting with Q Universe. In this case, I ran it on low price stocks. Why did I do that? Because I saw small cap stocks are very strong, the strongest in fact. Among the small caps, I found the strong fundamental stock, both in terms of valuation and earnings growth. I found it in a strong industry and it had a very low risk buy setup. Then I carried out another workflow starting with Q Edge sector analysis from the strongest sector, and this is the top down analysis. From the strongest sector I went to the underlying industries, found the strongest industries either in terms of strength or acceleration, went to the stocks, looked up their trading signals. In this case I focused on the trend following signals and found one stock from there also, RGNX, for buying. I found few more stocks using the Q workflows, Q systems. Let me show them to you. One is QDEL. This is also in the biotech industry. We already saw biotech is strong, healthcare is strong. This stock came to the trendline support in the weekly and precisely bounced from there with a very bullish shaped candle. In the daily, it stopped right at the white direction line, had a bullish long lower tail candle. Next day, it displayed bull release, and on Friday, it went up again. This may be taken as a pullback to white direction line setup. Technically, it is allowing us to take the pullback setup, more so because the weekly has excellent trend line support. The memory trend lines provide excellent support. So I thought this stock may be of interest. We already know the biotech industry is very strong. Let's check out QDEL's fundamentals. In Q technique, we are going to buy only stocks that are fundamentally strong in strong industries and are having technical low risk setups. And there are plenty of trades using this Q 360 degrees techniques, as I keep on sharing on my site also. This is QDEL. Okay, it's as per Reuters, it is healthcare supplies, not biotech. TradeStation was showing it as biotech. Let's check out the healthcare supplies industry. Using the gear icon, I can look it up. Look it up from Q Edge. Excellent score with acceleration, and once again an industry that is turning around. If we look at the fundamental score, I could not hope for a better fundamentals. Excellent valuation, the best possible secondary valuation, very robust earnings quality, short squeeze potential, 725% earnings growth, preceded by 416%, preceded by 34%. Therefore, not only positive, not only huge, but quarter after quarter accelerating earnings growth in a strong industry. Very fundamentally strong stock, as strong as I could wish for actually. And technically, it is giving a pullback trade setup. Let me spend a few minutes now on the sector strength. We already saw from Q Edge Home the picture, but let me delve into it a little bit. Let's look at the market breadth looked through using sector advance decline, industry advance decline, and stock advance decline. This is the monthly period, and then 10-day, 5-day, 2-day, 1-day, and the last column here is in real time during market hours. Now market is closed, so it is also showing 1-day period. We may focus on 1 month to 1 day. 1 month is clearly bullish. Clearly bullish. 10-day, no doubt bullish. 5-day, still bullish. Over 2-day and 1-day, it is not so bullish. Is it a sign of weakness? We saw earlier from the market ETFs and internal study, there is some weakness, but the weakness seems to be concentrated into the mega cap stocks. There is no other weakness. Therefore, we may still be selective and find 360-degree stocks like I did just now and buy them. However, if you are already having many long positions, you may be cautious only because of two things actually. One is the market is at a very high level, and 1 day earlier I shared on Twitter, and you might have noticed using your own Q finder, hundreds of stocks displayed bearish headwind together on 25th November, 2 days ago. That is a reason for extra concern. I mentioned that in Twitter, and I am repeating that concern here again. That is why I am suggesting if you already have many long positions, you may be slowing down, but there is no signal from the market internals from Q edge yet about taking short trades. And if we look at the chart that I tend to share, week to week sector comparison, on the left hand side I have week to week sector performance comparison from current week red bar to previous week green bar, but this picture on the left is from 1 week ago. That time market was bullish in terms of sector performance, and the previous week was also bullish. So from bullish 1 week ago, it remained bullish, though some sectors went down. Overall, it was still bullish. And this week, if we look at the same sector to sector comparison, from previous week, 5 days, previous 5 days, green bar bullish, to it became even more bullish in last 5 days, and it is not 1 week precisely, it is last 5 days. Over last 5 days, all the sectors went up, shown by these red bars. So sector level is showing no bearishness at all. If we look at Finder, we used Finder earlier, but we didn't look at the Finder weekly and daily pictures. The Finder weekly shows the balance between bears and bulls using multiple powerful Q signals for the weekly interval. If we look at all signals for the week, and this is not 5 days, this is the week, 82% are bullish, 95% of trend signals bullish, 85% of trend continuation signals bullish, and even reversal signals are balanced, you may say, 53% are bullish. If we look at the different signals bar plots, the taller plots are all bullish. So we can see the weekly interval is clearly bullish. If we look at Friday's plot, is it bearish? No, not bearish. 62% of all signals are bullish, 76% of strength signals, 63% of trend continuation, and 45% of reversal signal. So overall, it is still remaining bullish even using the Friday's signals, Friday's Finder signals. Therefore, in summary, the market level, market ETFs, the internals, the composite indices, the Q edge, sector industry, stock breadth, as well as Finder weekly and daily pictures, everything is showing bullish picture. Only reason for caution again is because market is to extended, and there were hundreds of bearish entry signals one day earlier, but there is no bearish signal again. I am continuing to have many more long positions than short positions. If at all I have some short positions, they are used as hedging positions. We are at the 1 hour point. Let me end today's session here. Thanks a lot for joining. I look forward to seeing you in our next session that will be on Wednesday, 8 a.m. Eastern Standard Time on YouTube Live. I don't send any email notification. One gentleman asked me about email link. There is no need to send any link for the weekend webinar, this webinar, or Wednesday's webinar. If you are following the Trading Profitably channel on YouTube, you will get notified anyway. And I tend to post the notification on my Twitter page. However, if you subscribe to the channel, you will get notified automatically from there. Thank you once again. You have a great weekend and trade profitably. Thank you. Bye bye.